Hello, this is TJ with netpicks.com and the Counterpunch Trader. Just finished a trade in crude oil this morning, and I thought I'd do a quick recording just to walk through the trade. So we start trading at 8:50 a.m. That's 8:50 Eastern Standard Time. And right here you can see it's 8:52, and crude is just broken out of this consolidation pattern from earlier this morning. You could see Counterpunch picked up a nice trade, but that was before our start time. There's another setup right here, and I've got my eye on this one because it meets our requirements. It's right at our start time, and it looks like it's going to cancel, but when this second bar closes on our line, our signal line, it actually keeps this setup valid. I have to still be thinking about this. There's another setup down here as well, but before that one even forms, this one is already coming down and hitting the entry. You see right there. So this becomes the trade. It almost canceled. If this red bar closed above this line, it would have canceled, but it didn't. So it remains valid. And these rules are here for a reason. And this is what happens. It pushes lower, hits the first target. At that point, our stop is going to move down to here to lock in a tick of profit and to take the risk off the trade. And then it comes down a little further and actually hits the target, goes through it like by one tick. And that is the perfect trade because that's as far as it had. I mean, it can't go any lower, right? Before it starts going up again, and it trades through the price level, which means you're going to get triggered on your exit. Sometimes it'll hit the target perfectly and there aren't any more buyers in the market, you don't get filled, and then you have to quickly act and either mark it out or push your stop down. But in this case, it traded through by one tick, and that part of the trade is over. You could be finished with target 2. You could also have another position for target 3. Sometimes it'll get to target 3, or you can trail the dotted line. And so it does stop out right here after trailing the dotted line down at 59.02. So it's a really nice trade. Target 2 got us 24 cents, and stopping out, trailing the dotted line, got us an extra 7 cents with 2 positions. So all in all, 31 cents, $310, and that trade went from 8.52 to where it stopped out here at 9.11. So pretty quick trade and a great way to end our Friday session and our week for crude oil futures trading. Remember, Counterpunch identifies where exhaustion points exist in the market, and that's what these 3 dots do. And so once these 3 dots form, that tells us that there is an exhaustion point, which means we want to come out swinging. That's what the Counterpunch is all about. The market gets exhausted, and we come out swinging in the opposite direction. And so this trade set up. And like I said, it almost canceled, but it remained valid. It came down, produced the perfect trade. The Counterpunch Trader is scheduled to be released later this month, so you're going to want to be on the lookout. We'll be holding some informative webinars you can register for. And we're going to be also offering an advanced live training. You'll get the opportunity to meet me live. This training will be taking place in London in June 18th and June 19th. But we will also be broadcasting the training over the internet. So anyone who's interested in that, stay tuned. Make sure you register for the webinar coming up later this month.